A lot of homeowners who are remortgaging just focus on getting the lowest rate. This is the complete wrong way to look at it. The rate is only part of the mortgage. The wrong deal, the wrong lender, wrong timing can cost you thousands. This video is about the mistakes that people make when they compare too narrowly. The rate gets your attention, but the full cost tells you the full truth. The remortgage mistake costing people thousands. The mistake is choosing to remortgage without understanding the full cost. Are there any valuation fees? What are the product fees? What is the cost over the term of the mortgage? People think that by saving money, they need to get the lowest rate possible. That is one of the biggest mistakes you can make. The full deal may not actually be cheaper when you take into consideration all the charges and fees associated with it. This can affect your monthly payments and the total cost over the fixed rate period and the balance remaining at the end of the product term. You need to remember it's not just about the rate. Rates matter, but it is not everything. Product fees matter, timing matters, flexibility matters, the lender's criteria matters. The cheapest looking rate may not be the cheapest mortgage available to you. A lower rate with a higher fee can actually sometimes work out more expensive than a slightly higher rate with a lower fee. You're probably thinking, how is that even possible? So sometimes what you do is you look at the difference in the monthly payments and see, for example, over a 2-year fixed rate period, so 24 months, for example, what is the difference in the monthly payments? When you take into consideration all the fees and charges associated with the lower rate mortgage with the higher fees, what works out more cost effective? Sometimes the higher rate with the lower fee works out better for your pocket. This is where a full analysis needs to be done to ensure you're on the right product. You want to ensure you are not giving any more money away than what you need to that mortgage lender. And a big mistake I see is people looking too narrowly. Some people only look at their existing lender. It shocks me. I'm like, why? Why would you do that? If you look at your existing lender only, you're not giving yourself a chance to get a better product. There could be a lender out there that you meet lending criteria wise that's got a better rate, a better monthly payment, could save you thousands over the product period. Why would you not explore that option if it's available to you? Because if you don't give yourself that option to look, you're basically saying to yourself, you know what? I'm going to stay with my existing lender. I love them and let them take more money. I'm going to pay a premium to stay there. Some people only look at comparison sites. I'm just, why? Why would you only look at comparison sites? Comparison sites don't know you. They don't know your lending criteria. They'll just tell you these are all the rates available. The thing what you're seeing on comparison sites is you see all the rates. They look attractive at first glance, but you actually don't even know if you are eligible, if you meet that lender's lending criteria, if your income is going to be used the way you need it to be used, affordability wise to get the loan that you want. So you could be like, yes, that's the lowest rate, I'm going to go with it. But then you can't actually get the mortgage loan with them because you don't meet their criteria. So you've just wasted your time, probably your money and your effort in trying to get a mortgage through with a lender that was never accurate and you were never right fit for from the outset. The lowest rate for you is the best rate that takes in consideration all the fees, all the charges, and the lender that's going to use your income the way you need it to be used to get you the mortgage loan that you want to be able to remortgage the existing balance to potentially a new lender. So the key takeaway is don't just look at the monthly payment, look at all the fees and charges associated with it, and then do a full cost analysis before you make that ultimate decision. Another key thing is make sure you fit lending criteria with that lender. Sometimes I hear this also, oh, it's only a small amount, it won't make a difference. I've seen people where they could get a better rate with another lender where it's £50 a month difference, but can't be bothered to do the whole remortgage process. Now, £50 a month, for example, just say you take a 5-year fix, that's 60 months, that could save you £3,000 over 5 years. £3,000. That's just one example. Why would you not give yourself that option? You go to work to earn money to pay for your mortgage, to pay for your bills. You don't go to work to give the mortgage lender more money because you feel like, you know what? I want to give you more money. No one wants to give the lender more money. Now, if you're going to make a big saving, put the effort in yourself, explore your options early because ultimately it's just going to benefit your pocket and you will be the winner. And please, don't leave it too late. It will just make it worse. When people leave it late, guess what? They panic. They've got less time to compare. They've got less time to potentially fix issues, less time to think clearly. They often accept the easiest option, but that may not even be the best option for them. Classic example, someone says, my deal ends next month. I need this sorted now. They're already under pressure. They've come to me in a panic. You want to be able to make decisions calmly. You want to be able to see the full picture. You want to be able to explore your options. You want to be able to make sure you're choosing the right product for your circumstances. And then if you start early enough, if the rates go down, your broker will notify you and let you know. With those certain lenders, most of them, you can actually amend the product on the case. So not only are you going to benefit if the rates reduce because the brokers get emails from them, but also if they increase, you're safe. So there's no panic. So make sure, start your remortgage process early. I always say 6 months in advance from your current product expiry date is the key time to start. And remember, the easiest option isn't always the best option. Yeah, it's easy, but it's not the best. Staying with your current lender can feel simple. Most of the time, there's no credit checks, no real application process. It's pretty straightforward. Switch from one product to another, no questions asked. But is it the right thing to do? Could be. It couldn't be. Unless you explore your options, you don't know. My ultimate thing here is that if you can save money, why would you not explore that option? Again, you don't go to work to pay the mortgage lender more money. You don't say, I love you, mortgage lender. Let me give you an extra £50 a month because I love you. That is, no one does that. Not even I do that. I always explore my options. I have a mortgage. I want to ensure I'm on the best product according to my circumstances. I do not want to give more money away to these mortgage lenders than what I have to. So remember, your current lender might be convenient, but convenient and best are not always the same thing. Now let's move on to what should you compare. Here are the key things that you should be comparing when you're looking at your remortgage. The monthly payment, total cost over the fixed period, assuming you're taking a fixed rate mortgage, product fees, legal or valuation costs, overpayment rules, flexibility, whether the deal suits your future plans, early repayment charges, any broker fees applicable. You're not trying to overcomplicate it. You're just making sure that you are comparing the right things. Let's look at a real life example. You could see a lower rate on compare the market. And be like, oh yeah, that rate is really low. And this must be the best deal because it's right at the top. But the fee is high, it's hidden. You haven't actually seen that. This is a classic case where it happens all the time when I speak to clients. All the flexibility is worse. Like when you choose a product, you've got to base it on your circumstances and your future goals, right? If you're looking to move, for example, in 2 years, 3 years, why would you commit to a 5-year product? Probably not, because you want flexibility. Every lender will offer different loan amounts and every lender will assess your income in different ways. You don't want to have to pay a penalty to break your current deal if you can't get the additional borrowing with your current lender. So the key takeaway here is make sure you don't just look at the cheapest, because the cheapest may cost you more in the long run. I've seen examples where rates look better, but once the full cost was compared, another option made sense. It's all about knowing what you're looking for. Now, what is the smart remortgage approach? Simple. Start early. You're not in a panic. Compare the full cost. Check your current lender. Check the wider market. Think about your future plans. Really think about it. Are you looking to move, bigger house, kids, nursery, childcare, whatever it could be? Make your decision calmly and not in a panic. And don't let the headline rate make the decision for you. Compare properly. And the key takeaway message from me today is the rate does matter. Of course it does, but it doesn't tell you everything. The easiest option may not be the best. The cheapest looking option may not be the cheapest. Compare the full deal before deciding. The mistake is not trying to get a better rate. The mistake is choosing to remortgage without understanding the full costs associated with it. Now, this leads into the next mistake. A lot of people lose money because they assume their current lender is automatically the best. Sometimes staying with your lender is actually correct, but sometimes it's a huge mistake. In the next video, I'll explain why staying with your existing lender can be a huge mistake and when it still might make sense.